So in this subtopic, we will explain in more detail about Export Credit Insurance or ECI. So what is ECI? Export Credit Insurance is an insurance policy and a risk management product offered by private insurance companies and governmental export credit agencies to business entities wishing to protect their account receivable from loss due to credit risk such as protracted default, insolvency, or bankruptcy. We go to the next part, which is function of Exim Bank. Export-Import Bank of Malaysia Berhad was incorporated on 29 August 1995 and is fully owned by Malaysia's Ministry of Finance. So the function of Exim Bank is to provide credit facilities and insurance services to support export and import of goods, services, and overseas investment with emphasis on non-traditional markets, as well as the provision of export credit insurance services, export financing insurance, overseas investment insurance, and guarantee facilities. Okay, next, there are a few objectives of Exim Bank, which is to provide Malaysia's international trade, particularly trade with the emerging market, to promote a vehicle for the implementation of the national policy of enhancement of international trade, and last one is to support Malaysia's companies to participate in reverse investment project, particularly in non-traditional market.
Next, we will go to the types of facilities offered by Exim Banks. There are two types of facilities, which is the first one is banking facilities, an insurance policy that covers non-payment resulting from the delivery of goods or services due to the commercials and or political risks, such as short-term and medium or long-term. Second types are credit insurance facilities, consisting of conventional banking facilities and Islamic banking facilities, such as term loans, working capitals, and guarantee. So I will explain more about short-term insurance first, which have coverage up to a maximum of 1 year. The first one is comprehensive policy exporter trade credit insurance export. To regular export to overseas importer to credit up 118 days. It's also covered directly from the supplier countries. There are three variations, which is the first one is comprehensive policy shipments, comprehensive policy contract, and the last one is comprehensive policy services. Next is a bank letter of credit policy. A bank letter of credit policy is guaranteed by US bank that are a buyer in the foreign transactions will be paid. These types of credit letter has become a routine part of international transactions, which often involve shipping large quantities of goods. The third one is multi-currency trade financing scheme. It's a short-term trade working capital financing facilities that allows you to finance your sales and purchase of Sharia compliance goods, inputs, and services under a documentary, credit collections, or open account basis. Lastly is indirect exporter financing schemes, which is a without resource financing scheme for a small and medium-sized enterprise (SME) who are indirect exporters. It's also covered the bank for 90% of its loss.
Next is medium or long-term insurance, which have coverage up to a maximum of 15 years, such as specific policy, political risk insurance, buyer credit guarantee, and bond risk guarantee. The first one is specific policy, which is contracts or constructional works or services. Specific policy is a form of credit insurance that ensures Malaysian exporters who undertake contracts for export of capital goods or construction works. Next is political risk insurance. Political risk is a specialized insurance that protects financial institutions in the face of political change, both governmental actions and politically motivated violence. Political risk coverage is excluded under many insurance policies, but when you are dealing with high-value globalized transactions, it is vital. The third one is buyer credit guarantee. A buyer credit guarantee is a security to the lender in case of a credit risk caused by a foreign buyer, the buyer's bank, or country. The guarantee covers commercial risk and all political or sovereign risk. The coverage will be decided on a transaction basis. Lastly is bond risk insurance. Bond insurance is sometimes also known as financial guarantee insurance. Bond insurance is most commonly seen among municipal bonds and asset-backed securities.
Now let's take a look at the risk covered and not covered. The policy does not cover all risks involved in export transaction or the exporter's own default or negligence or his failure to comply with the terms and conditions of the policy. Risk not covered divided into two, which is commercial risk. Commercial risk involve buyer's insolvency, the buyer's default payment, the buyer's failure or refusal to accept goods where the reason for refusal are outside exporter's control. The second one is non-commercial risk, which is blockage or delay in travel payment due change in government regulations after the shipment, imposition of import restriction by government of buyer, cancellation or non-renewal of export license or imposition of an export restriction when the contract is signed, war revolution or other similar disturbance in the buyer's country. Other than that, Exim Bank will not cover the following of loss, which is non-payment arising from dispute over the non-fulfillment of the terms of contract, risk which can be insured or not normally insurable by commercial insurers such as marine, fire and theft, failure or inability of buyer to obtain import license or release of foreign exchange to pay for the goods because of some regulation promulgated in the buyer's country on or before shipment of goods, default or insolvency of the exporter's agent or of the collecting banker, fluctuation in exchange rates causes inherence in the nature of the goods, and lastly, failure to comply with the terms and conditions of the policy.
Some of the benefits in taking the insurance policies under Exim Bank are, firstly, exporters can compete on equal terms with overseas competitors, especially those who have access to similar credit facilities in their countries. Next, Exim Bank assumes up to 19% of total risk and thus enables exporters to extend credit to foreign buyers and to venture into new markets with confidence. Thirdly, reduce the element of risk in granting credit to overseas buyers. Exim Bank provide an independent and true credit investigation and financial standing of the buyer. Then, Exim Bank will assist on recovery of claims from the overseas buyers. After that, provide additional collateral security insurance guarantee for export financing. Lastly, double tax deduction relief for export credit insurance premium. This is cost to the exporters. That's all for me. Thank you.